Hi, I'm Tom and welcome back to our series on financial planning. Last time we talked about credit cards. Today we're going to talk about the more traditional forms of loans, being mortgages or home loans, car loans, and student loans. So there's four main pieces of any loan. There's the amount that you're borrowing. There's the interest rate or the percentage that you're paying to them. There's the term of the loan. Is it a 30-year mortgage? Is this a 5-year car loan? And then the payment amount. Those four pieces, when you change any one of them, are going to impact at least one of the other pieces of that puzzle. Any loan can be looked at through those four pieces. Just because one payment is higher than another payment for a loan doesn't mean one is necessarily better or worse. If you have a home loan for $100,000 and you have the same interest rate, but one is a 30-year loan and one is a 15-year loan, the 15-year loan is going to have a higher payment, but you're going to pay less interest over the term of that loan. One isn't necessarily better or worse than the other, it just depends on your financial situation. One big thing when considering should we take out a loan, you should be referencing your budget and if it makes sense. Before you buy a home, you should budget out that loan payment and the other costs associated with home ownership, being property tax and insurance and other maintenance. And look, does that make sense in our budget? If it doesn't, you probably shouldn't take out the loan and buy that house. You could either find a different home that you could afford. You could shop around for different loans from different organizations. Someone may give you something more favorable. Or you could just wait, save up, get a raise, and then relook at buying that home or a different home. Debt can be a great tool for you to move your financial picture and your financial goals forward. But as with all tools, it needs to be used appropriately and measured. If you take out all the loans that you possibly can qualify for, you're going to be in trouble. You're going to be drowning in debt payments. Similar to a credit card, just because you're offered a high limit, that doesn't mean you should necessarily take out that full limit amount. Similar, if you're getting pre-approved for a mortgage and they say, well, we can loan you $400,000 on a home. But when you look at your budget, it really only makes sense if you were to buy a home of $300,000. You should probably shoot for that lower amount and not take everything you possibly can. Hopefully this was helpful and a little informative on when and how you should take out loans. If it was, like and subscribe, and we'll see you next time.